Good afternoon, viewers. Today we will dive into the latest developments in both the traditional financial world and the cryptocurrency space, as significant legal and institutional changes shape the future of the markets. Markets rally as Trump signals softer stance on China and the Fed. United States stocks saw a notable upswing on Wednesday following a surprising shift in tone from former President Donald Trump regarding trade relations with China. Trump announced a significant reduction in the steep 145% tariff on Chinese goods, signaling a broader easing of tensions that has provided a boost to investor confidence. His latest comments had an immediate impact on Wall Street. The Dow Jones Industrial Average climbed 1.47% to close at 39774, although it retreated from intraday highs that briefly pushed it above the 40,000-point threshold. The broader SP 500 gained 2.14%, reaching 5,474, while the tech-heavy Nasdaq led the surge with a 3.09% rise to 16,803.75. Trump softens approach toward China and the Federal Reserve. In a series of public remarks, Trump stated that tariffs on Chinese imports would be reduced substantially from their current levels, although he clarified they would not be entirely eliminated. It will come down substantially, but it won't be zero, he said. Trump also adopted a more diplomatic tone, suggesting he intended to take a friendlier approach with Chinese President Xi Jinping, vowing to be very nice rather than confrontational. The shift in rhetoric extended beyond trade policy. Trump also addressed speculation about the future of Federal Reserve Chair Jerome Powell. Contrary to earlier reports, Trump confirmed he has no plans to remove Powell before the end of his term in 2026, a statement that helped stabilize the United States dollar. On Wednesday, the dollar index rose by 0.73%, recovering to 99.66 after dipping to multi-year lows in recent weeks. These comments appear to be part of a broader strategy of de-escalation coming from the Trump camp, aimed at reassuring financial markets ahead of key trade negotiations. With a crucial 90-day deadline looming after which paused tariff hikes could resume, market observers are closely monitoring signals from Washington. Tariffs, trade deals, and global impact. Despite the optimistic headlines, not all tariffs are being reconsidered. The baseline 10% tariff on imports from all countries remains in place, representing a substantial hike from prior trade norms. The administration continues to argue that many international trading partners still leverage non-tariff barriers to tilt the balance of trade in their favor. Analysts suggest that even partial tariff relief could have far-reaching effects not just for United States-China trade, but for global supply chains, manufacturing costs, and even emerging sectors such as digital assets. As markets adjust to a potentially less aggressive United States trade policy, the implications could extend well beyond equities, reshaping expectations in commodities, currencies, and crypto. While many questions remain, one thing is clear: Wall Street is paying close attention, and Wednesday's rally may be just the beginning of broader shifts in market sentiment. Trump Memecoin soars after exclusive dinner with Donald Trump announced. In a surprising fusion of crypto culture and politics, the Trump Memecoin has skyrocketed following news of a high-profile event that promises unprecedented access to former President Donald Trump. The token surged over 75% in value after organizers revealed that the top 220 holders will be invited to an exclusive dinner with Trump himself. The event is set to take place on May 22, 2025, at the luxurious Trump National Golf Club in Washington, D.C. According to the official announcement, only those who rank among the top 220 in terms of Trump token holdings will be eligible for an invitation. The announcement triggered a frenzy among traders, with many racing to accumulate more tokens and secure a place at the table. Following the announcement, the price of the Trump token soared from around $9 to a peak of $16. The surge highlights how real-world utility and exclusive perks can drive momentum for even the most unconventional crypto projects. Clarifying the invite list. An initial tweet had mistakenly stated that the top 250 token holders would be invited, but the official event page later corrected this to the top 220 holders only. The clarification added an extra layer of urgency, prompting increased competition among community members vying for a coveted spot. Strategic tokenomics. Delayed unlocks to boost confidence. In tandem with the event announcement, the Trump token team also revealed a change in its token release schedule. The initial token unlock, along with 3 months of daily unlocks, will each be delayed by 90 days. This move appears designed to reduce short-term selling pressure and encourage longer holding among investors. By aligning tokenomics with a high-profile event, the project is reinforcing its community-driven appeal and creating incentives that go beyond typical market speculation. Politics meets crypto in 2024-2025 election cycle. This exclusive dinner is more than just a headline-grabbing promotion, it represents a growing trend of Memecoin-fueled political engagement. With the 2024-2025 U.S. election season in full swing, crypto and politics are beginning to overlap in ways never seen before. The Trump campaign, which has recently shown increased openness to pro-crypto narratives, appears to be leaning into this cultural shift. The former president has reportedly expressed a more favorable stance toward crypto regulation, further blurring the lines between digital assets and mainstream political movements. Centralized exchanges quietly accumulate over 1 billion XRP. What are they planning? While headlines in the crypto world continue to be dominated by developments around Bitcoin ETFs and Ethereum's price swings, XRP is making a stealthy comeback, driven not by hype but by heavy institutional moves. According to recent observations, major centralized exchanges are quietly amassing billions of XRP, signaling what may be a strategic positioning ahead of potential market-shifting events or regulatory breakthroughs. One of the most eye-catching revelations is that Coinbase, a platform that once distanced itself from XRP during the height of the SEC's lawsuit against Ripple, is now increasing its XRP reserves. Though the exchange previously delisted XRP amid legal uncertainty, the latest on-chain data suggests Coinbase and other top-tier platforms are once again stockpiling the asset. What's especially noteworthy is that these exchanges are not selling XRP back into the market. Instead, they're retaining it in custody, a move that hints at rising confidence in XRP's future potential, perhaps in anticipation of broader adoption, regulatory clarity, or even upcoming XRP-backed ETFs. Holding 3 and 4% of XRP's circulating supply, a power move. The combined XRP holdings of centralized exchanges now exceed 1 billion tokens, accounting for approximately 3 and 4% of the asset's circulating supply. This level of accumulation is more than just a show of confidence, it represents a potential shift in control over XRP's market dynamics. If these reserves are funneled into institutional investment products or used for custodial and settlement services, exchanges could exert unprecedented influence over liquidity, pricing, and availability of XRP across global markets. This move also places these entities in a key position to meet liquidity demands if XRP ETFs currently proposed by the likes of Grayscale, 21 Shares, Bitwise, and Franklin Templeton receive regulatory approval. The changing attitude toward XRP isn't happening in a vacuum. The landmark July 2023 ruling by Judge Annalisa Torres, which stated that XRP is not a security when sold on public exchanges, was a major turning point in the token's legal narrative. Now, with the SEC dropping its appeal and settlement talks in progress, confidence is returning not just among holders, but within the institutions that once viewed XRP as legally toxic. Exchanges may be preparing for XRP to play a pivotal role in future cross-border payment systems, tokenized finance, and regulated crypto investment vehicles. This suggests we're witnessing the early stages of a repositioning, where XRP becomes a cornerstone of digital asset infrastructure. Whether the recent accumulation reflects preparation for new financial products, a hedge against regulatory outcomes, or belief in XRP's long-term value, one fact is impossible to ignore: exchanges are making moves. Quietly but decisively. As the rest of the market watches Bitcoin and Ethereum, the XRP chessboard is being rearranged behind the scenes. And when the next wave of adoption comes, it may be these platforms armed with over 1 billion XRP that lead the charge.